Hi everyone, it's Mike from Order Flows and welcome to the Order Flow Dynamics course module number 7 on recognizing initiative and responsive order flow. So, when you hear the terms initiative and responsive order flow, you think of market profile analysis, right? Because that's how they define the type of buying or selling that's occurring in the market and where it occurs. But the drawback with looking at initiative or responsive activity in market profile terms is you spend a lot of time on the sidelines, right? You look for, on the market profile, right? It's based on 30-minute time periods. And if you're trading with order flow, you really want to be trading what's happening right now. And when you trade order flow, you're going to be much more active in the market. So what you want to be able to do is determine the initiative and responsive activity as it's happening. Now, not looking on a 30-minute time frames to decide, well, this is initiative or this is responsive. You want to be trading based on what's happening right now to determine if it's initiative or if it's responsive. And the easy way to tell is, if we open above the previous value area and go sideways, what's the market telling you? Well, responsive selling should take the market back into the value area. But the market, if it's not moving back to the value area, right, instead the initiative buying is keeping it above the value area, chances are stronger for a move away from the value area. That's going to be your initiative activity, which ultimately leads to trends. Now, when you think of initiative and responsive trading activity, it's going to determine sort of what kind of trading that's going on. All right. So when you see responsive buying or responsive selling, you're going to be looking for a reversion to a mean, because what's happening is people are in responsive buying, they're buying below value, they're looking for the market to revert back to the mean. And if you use VWAP, your mean reversion trader, you're always looking for the market to revert back to the mean as you're buying below value. And if you're a responsive seller, right, your market is above value, above the mean, you're going to be looking for the market to move back to the mean. Okay, so there's so many different. It's interesting because there's so many different ways that you can trade the market, approach the market, and there's no one right or wrong way. Okay, sometimes people say, no, you have to trade this way. No, you have to trade that way. That's bullshit. You got to find the way that works for you. And one of the reasons why I do courses like this is so you can be exposed to other types of trading that you probably haven't thought of using in your own analysis. So maybe you could take some of what you're learning here in this course and apply it to your own trading. So the key is understanding if the order flow is initiative or responsive, right? If the activity is initiative, you're going to be buying or selling breakouts. If it's responsive activity, you're going to be trading off support and resistance, back into the day's range, back into the value area, back into a reversion to the mean, back to VWAP, etc. Now, I have a simple way of differentiating between initiative versus responsive activity by looking at the order flow, specifically the order flow delta footprint chart, points of controls. A bar's point of control is a form of recognizing value in the market. And, people always say, well, every bar is a point of control, and sometimes it means something, sometimes it doesn't. But you also have to realize every bar has a value area, okay? Just as, if you collect something, okay, if you collect baseball cards, for example, sorry, women, you're not going to understand that. Maybe if I put it in handbag terms, if you collect handbags, some handbags are going to be worth more than others, right? Just as some baseball cards are going to be worth more than others. So, even though every baseball card or every handbag has a value, the values vary. Okay, so now think back to module 5 about new money in the market. Demand lows, right, which I was talking about module 5, are like responsive buying. Supply highs are like responsive selling. So what I like to look for in the order flow for responsive selling is an area I define as resistance by prominent points of controls. Then the footprint delta, right, not the volume footprint, but the delta footprint, showing bids just getting hit with impunity. Okay, so that's how I define responsive selling. Okay, so here we're up here right near the high here, right? This bar. What do you see? Right, you see the points of control up near the high. Now I didn't turn on prominent points of control on this footprint because some people don't have my software. I think my software is best for determining prominent points of control. It's the only software out there that determines prominent points of control. But what you're looking for, in a basic sense, is point of control up near the high of the bar, near a swing high. And what you're seeing in the delta footprint is immediately after you put in that prominent point of control, just all the bids getting hit, 124, 51, 37, right? And then sort of goes sideways the next two bars, and then boom, all the bids getting hit. Then a bar, doji bar, all the bids getting hit, right? As the market just immediately drops in the next bar, a quick 3 points. Right, here's responsive selling. Now this time you don't have that prominent point of control here. Point of control is just right here, but what you have appearing in this point of control is look at the two bars surrounding it, right? You got point of control, point of control, point of control, all at the same level, right? That's a powerful sign that the market is putting in this value area. And as you're trading right at that value area, people just come in, hit those bids there, right? Market goes sideways a little bit, more hitting of the bids here, more hitting of the bids there, right? So I know that there's responsive selling up at this high, and I could look for the market to sell off, which it does there. So what I like to look for in the order flow in responsive buying is an area defined as support, again, by prominent points of control, by the point of control. It doesn't necessarily have to be prominent point of control. Don't get your head around, oh, Mike says it has to be prominent points of control. No, if it's a point of control that matters, or several points of control right around lined up, that's the same thing. And this time look for the delta footprint to be showing all the offers getting lifted. Okay, so what you're looking for here, you get coming down into this low, right? It's not a prominent point of control. All points, you got 3 bars, point of control at the same level. Okay, and then what happens? Boom, offer, 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 one bid, offer. Continues, offer, 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 one bid, offer, 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 offer. Okay, that's responsive buying. People are attracted to these lows. Here you got the prominent point of control. Boom, basically all the offers here. All right, this bar, again, mostly all the offers here. Yeah, you got one bid side traded here, a couple here, a couple there, but predominantly all the offers getting lifted, coming in right after this prominent point of control is being put in at the low of the day. Now, initiative buying, right? Think of initiative activity in a sense of new money, fresh money. Not always. It could just be, everybody that's trading during the day. But oftentimes, there's new money mixed in the initiative activity. And it can signal a trend. So go with the direction of the initiative activity to maximize it. Don't trade mean reversion. If you're in a period of initiative trading, you got to go with the direction. And where are you going to be looking for the initiative buying is, you're going to look around previous levels, swing high, swing lows, pivots. Now, an easy way to do it is look on a volume profile. Okay, so like NinjaTrader, the new version, NinjaTrader 8, the fully paid version, has a volume profile tool that you could adjust. Right, so a simple way to look at it is 1 minute time periods. Or sorry, this one is a 15 minute time. 30 minute. Right, I'm sorry. It's a 30-minute profile. So you can see the previous one. It's a little hard to see on this chart. You got to print it up. But you can see the value area high, the value area low, and the previous point of control. Okay, so when you're seeing initiative activity, right, you got to think of where the market opens relative to, the previous value area high, previous value area low, previous value area. And this is how I like to use volume profile intraday. And again, it doesn't have to be a 30-minute profile. It could be a 15-minute profile. But you're going to get some opportunities. Not every period is going to be like this, but oftentimes, the next you'll end one period, one 15-minute, one 30-minute period, and we'll close right in the middle of value area. But where you got to pay attention is when you're opening above or below the previous value area. Now, this previous value area is very tight. This was the evening, this is the Asian session. But you can see how we opened up here. This is the start of the new profile here. This is where it just ended. We're opening up outside the value area. Okay, so when you open up outside value, either to the upside or to the downside, that's when it gets interesting. Okay, because what can happen is you can just revert back into the value area, which is what often the market does, or it can shoot in the opposite direction. The initiative buying could be coming in. Since we're opening above the value area, it's going to be initiative buying you're going to be looking for. And the market rallies. You see this is about right here. Initially you got 2 bars. It's about a 10-point move here. Okay, and you can see the buying imbalances coming in. 1, 2, 3, 1, 2, 3, 4, 5, and about 8 here. Okay, you see obviously the market then went sideways, put in its new value area, and then the market continued higher. Right, this is when we talked about earlier horizontal and vertical moves. Here's your horizontal move, then it puts in the vertical move, then it goes horizontal, then it starts a new vertical move. Right, the initiative buying happens on the vertical moves. Okay, here we go. Now again, like I said, look for areas where you're opening outside the value. Okay, so this was the value area high right here, 32.03 3/4. We opened up above it. Market starts going up, comes back down, test that value area high. Okay, then what happens? The initiative buying kicks in. See, lifting all the offers here, mostly lifting all the offers here, lifting all the offers here, here. All right, so imagine even if you're not yet convinced, some people I know like to throw bids in here. Right, they like to see, well, we opened up above. They're going to look for that test to come in, have a tight stop, look for the market to bounce. Sorry, not bounce, but come back into the value area. That's where they're going to load up, and then look for the initiative buying to come in. But if you're not that type of trader, you say, no, I need to see the initiative buying. By the time it comes back up here, going sideways, and you see this initiative buying in this bar, which is basically all the offers being lifted, you're getting long here, 32.10. Then it moves up, makes the vertical move up to a new horizontal area up here around 32.17. Okay, let's take a look at one more. Kind of similar. We open up above the value area, make a test back into that value area high. It's still a little bit away. Then we rally up, new high here, new high of the day. Comes back down, sells off, rotates lower. Where does it rotate to? The value area high here. And then it rotates back up to new highs. Initiative buying. Look at this bar. All offers. Look at this bar. Mostly all offers. You got some nice bids in here. 193, 104. Here, 416. Then all the offers being lifted. So, that's one way you can use market profile with the order flow. Okay, look for that initiative buying. Just like, it's one of those things, like I said, if you're looking at just one market, you'll probably want to get 2 or 3 instances in the whole session that are like this, where you open above or below the value. But expand it a little bit, look beyond just one market if you're going to trade this way. And you maybe you might want to mix up, besides a 30-minute profile, maybe you want to go to a 15-minute profile. There's ways you can adjust it to suit your trading style. So initiative selling is, it's the opposite. So you're going to open outside of the value area and below a key level. For example, yesterday's low. But you're going to look for the market to move away and keep going in that direction as the new money comes into the market. Okay, so for example, this 31.56 area, this was the overnight low. Okay, and market came off. You see some selling. It hit some support here. Okay, and it came back up. Then the more selling came in. Finally, you broke back down to that support. Initiative selling took out that support level. The overnight low here, 31.56 as well, and kept going down. All right, you can see here, look at this bar, all selling, not even anything volume up here, right? And this bar almost all selling, this bar almost all selling. Okay, so you can see the signs coming in of initiative selling when you're taking out a support area, and the overnight high, overnight low is a good support area for a lot of people. So Here we are, right? This is your initiative selling coming in. Here's your value area low from the previous value profile. And we open up. This is a 1 minute chart, or sorry, a 60-second chart. 60 second, 1 minute, 60 seconds in 1 minute. Again, it doesn't matter if you use 1 minute or 60 seconds, it's up to you. But we open up below the value area, start rotating back up. And again, you know, lots of times people, you got to understand, we're in a move down, okay? So if you're in a move down, you can have a rotation up and then move back down, okay? It's not going to always have a V-shaped move, right? It's not going to always sell off from 31.50 down to 31.35, back up to 31.50. You're going to get your little rotation here and then continue down. So where does the rotation go back to? It goes back up to the value area low, right? You can see it right there. There's the value area low. And then we rotate back down. This is your initiative selling. I didn't use the delta footprint chart. This is just normal volume footprint chart. But hopefully you can see that information in there. Okay, now here's one where value area, we open up way below the value area, right? So the value area is right up here. And we sell off, we open up lower. Market sells off, rotates back up, sells off, right? This is why I spent some time talking about rotations, right? So you got to understand, right? Again, lots of people think, oh, we're coming in here, this is going to be our low. But what's happening? You're rotating. Vertical, horizontal, vertical. Okay, that's why I talk about vertical and horizontal as well as market rotations. So you can understand that the market, don't all come off 10 points, rally back up 10 points, come off 10 points, like that. No, it sells off 10 points, rallies up 3. That's your rotation. Sells off another 10 points. Look for that. Okay, so new buying, right? We just had that module earlier on fresh money in the market. When you think of fresh money, think of initiative positions, right? And easy way to see it is when buyers are lifting all the offers, or when sellers are hitting all the bids. All right, what's happened? Market hit a high, came off a little bit, and then, okay, far enough, buy some more. Boom, lifting all the offers, mostly lifting all the offers, right, as the market is going higher. There's this misconception that institutional traders don't buy highs, right, that they only buy the lows. No, that's BS. Institutional traders, when they're in new positions, they don't care if the market's at a high right now, right? Oh, we're trading at the high today, I can't be buying it. That's BS, because their time frame is much longer than ours. We're trading on an intraday time frame. Maybe some of us are trading on a swing time frame. Institutional time frame traders, they're thinking months ahead, right? So, oh, the market's trading 30.74. Oh, we're getting we're going up. I better buy some. Where's the market now? We're trading 30.62. Oh yeah, that's great. Buy as much as you can now, right? That's how they think. Right? They don't think, well, yeah, I'm gonna finesse it here. I'm gonna, work a 60 bid, like that. No. Oh shit, we were just trading 74. Now we pulled back to 60. Buy them, right? That's how they talk. That's how they trade. I know, because that's how I traded. That's how the guys sitting on the left and the right of me traded. So initiative trades should take place sooner rather than later, since the move is already happening. And what do I mean by that, right? Is if the market is showing initiative buying, right, or initiative selling, the move is going to happen now. Okay, it's not like, oh, there's initiative buying, let's all start buying, and the market doesn't move. No, initiative buying occurs on vertical moves. Now the holding periods can vary, and if you're a small time frame trader, you might be just looking at 30 seconds, a minute, 2 minutes, 3 minutes. It's interesting when you look at people that trade on Top Step Trader, and you look at their data. The guys, I'll see guys, oh yeah, I had 10 trades, 8 were profitable and 2 were losers. Then you look at their time frame they hold, and it's like their winners are like 4 seconds, 5 seconds. The losers are like 3 minutes. Holding periods vary, and just bear that in mind. You can hit and run, or you can try to ride the trend. Now, responsive trades often take longer to work as the market's rotating back into value, and oftentimes you got to hold those trades longer, right? So if you're looking for a rotation back into value, it may come later rather than sooner. That's just sort of the nature of the market. It's something you have to think about when you're trading responsive versus initiative order flow. Again, initiative order flow, that's the type of order flow I like. I look for the market to start making its move. If it doesn't make its move quickly, that's time to cut it, right? I misread the market, right? I thought it was initiative, but it's not moving, right? If it's initiative activity, the market should move in its direction. If it doesn't, then it's probably not initiative. But if you're looking at it in responsive terms, oh, this is responsive selling, this is responsive buying, looking for that reversion to the mean, so to speak, it might take a little bit longer, right? It's just because the market is going sideways, the market is rotating for it to go back towards the mean. So this concludes Module 7. In Module 8, I'm going to discuss the mythical creature called the stop hunt, or the stop that everyone always likes to go hunting, and people say, oh, they hunted my stops, but in reality it's just an excuse. So I'll see you there. Bye-bye.